technology is indeed progressing very fast, particularly when it comes to consumers who bank with banks who are technologically ahead. It also means that banking is becoming very complex, perhaps sophisticated, perhaps a little difficult. So how are banks staying ahead of this, or how is the banking system staying ahead of the curve, so to speak, and how is it keeping pace with consumers who always seem to want much more? Well, I'm joined by Anup Bagchi, Managing Director and CEO of ICICI Securities, who will try and help me understand and ask that question.
Thank you, Govindraj.
Anup, tell me, so, it's an eternal battle, which obviously began quite recently. Consumers are smart, they are now mobile. They are socially connected thanks to social media, and obviously the demands on the system, which is the banking and financial service system, is increasing by the day. So how are you keeping pace?
No, I think we can broadly divide it into two parts. One is the transaction part, where I think banks have been able to, keep by and large keep pace with the client. So today, for example, if you want to, move your money, trade a stock, invest, redeem, do any of these things, you can pretty much do it. Whenever you want to.
As opposed to not being able to do it earlier.
As opposed to 10 years back, when you would find it difficult to do, or for some transactions at least you had to go to the branch and do all of those things. But the core issue comes around, client acquisition and the documentation just to get the client in. I don't think that has moved that fast.
Right. Yeah.
Okay. Also, we must realize that
it's actually not moved at all, because it's the same paperwork that you require.
You may argue that it has become a bit worse.
Okay. Okay.
Particularly on the stockbroking other side, perhaps it has become a bit worse. Regulators are trying very hard to make it easy. Now with eKYC, etc., perhaps it will become easy. Because what has happened, you see from a client's perspective. He is leading his life in a continuous fashion. Okay. And frankly, he doesn't think about, banking or stockbroking or broking or investment, in a very meaningful way in his life. And if you look at other facets of his life, it is quite frictionless. I mean, you want to buy a book, you go buy a book. You want to, but there the payment system, of course, is banking. So I'm saying from that perspective, banking has kept pace with the rest of the world.
Right.
Okay, so that is, and there he sees a fairly frictionless world. Now you come to BFSI, and most of the BFSI is also, is regulatory led in a way.
Right.
And rightly so.
Right.
And rightly so, because you can't be very loose about BFSI from a regulations perspective or from a risk perspective. Now, from a client perspective, he says that, I am a good client. I am talking of good clients and, not so good client. Normally, clients are all good. They don't have any ulterior motive. They are not into phishing. They are not into sort of doing all of those things. And he thinks that, I am a normal guy. And from his worldview is that I am doing stuff with my own money, and why are you coming in between? Why are you trying to do so much of KYC? Why are you trying to onboard me and making life so difficult for me? Why do you want me to sign 40 or 25 signature or 30 signature when you open the ICICI? And he doesn't understand as to why you are not moving forward. He perhaps doesn't appreciate that it is all to safeguard his own interest, his or her own interest, because now with such fast moving financial world, that particular client's money may move.
Right. But it could also be argued that the bank is trying to protect its backside.
No, of course, of course.
And more so than perhaps the
because
customers' interests.
I would go with it. But we must understand that, when somebody says that, a bank is trying to protect its backside, or let's say general insurance is trying to protect its backside, but general insurance takes premium to protect its backside. So clients are paying for that premium, right? And if something happens, then it goes back. Now, yes, but in protecting its own, so to say, backside, it actually protects clients' interest.
Sure.
I think at this point of time, the golden mean, has not been hit. But to say that, it should all be very open and, let anybody come, whatever be the identification without checking, you should open an account. Clients, from a client perspective, I think it is right for him to demand that. The fact of the matter is 99.999999 to the 7-10 decimal places, they are all normal good guys like you and me. We have no ulterior motive. But for that residual risk that you have, you are burdening the whole system.
So what's the way forward?
What's the way forward? Now the way forward is now to make sure that you take some calculated. So what is the golden mean? I think the golden mean is that you take some calculated risk in the sense that, and you do tiering of KYC. Okay, that if you have, XYZ
so
kind
this
of.
Is you desiring it, or this is the system?
No, I think active dialogue. See, active dialogue and understanding is happening. For example, you have been yourself involved in Aadhaar. Okay, you know what Aadhaar is. Now with eKYC coming in, still what is the issue? Issue is that I come, I get to see, what is it, your identity proof and your place of residence, etc. in case something happens. And if the document matches, you don't have to then give those documents to me, and you can do it. But still there is an issue of give that document. I think there is an offline leg of risk, which you cannot, by and large, I am not able to fully envisage in the Indian context, which is not fully digitized to take out. But however, if certain databases are made accessible to, let's say, PAN database, or let's say Aadhaar database, if they are made accessible to certain set of industry
so
players.
let me ask
banks.
a counterfactual question. Is by accessing all these databases, do you think historically or otherwise you've been able to manage risk better?
No, yes. I would say that the answer by and large is yes. Because there is a counterfactual to the counterfactual, that had you not done it, what would have been the risk? Okay, but I would say that yes. You see, the whole issue about risk is that if a person thinks that, see, what is it that the people who want to sort of sabotage the system think? They play the odds, they play the risk. Okay, and if they think that the risk is against them, they will not do it.
Right. So let me ask you a question. As you had ICICI Securities, you're in retail stockbroking. Yes. Your desire is obviously to grow the business. At a time, the markets are not really growing in that sense that there is retail participation. One of the factors that would perhaps bring more people is greater ease of transactions and trading, right? But I'm guessing you're not able to do that.
No, I would say, as I said, see, greater ease of transaction and trading. I think that is
the optimum.
No, it's not optimum. But that is a function of our ability to reach out to the customer and demo to them that it is so easy and all of it. But from just a regulatory perspective, or that is it frictionless? Of course, it is frictionless. I mean, we do 200, 300, and in good days 500,000 transactions a day. It's not possible in an offline world, frankly. Okay, but I don't think that's an issue. I think the issue with the securities and investment market of India, and I would also say in a way banking market in India, that ability to just open an account and onboard a customer is just very painful.
Crippling.
It's just very painful. Okay, it's like going through hell.
Yeah.
Okay, because imagine a client, imagine you get sort of recruited to one of the big 3-4 IT companies, and you are sitting in Kochi or Mysore or some other place. You don't have an identity, you don't have a place of residence. Okay, you cannot open a demat account with that. Okay, you can open a bank account because you are still allowed some leeway in KYC. You can't open. So I am saying the process of entry into that market is very, very difficult.
Right.
It raises the cost, and when it raises the cost, what happens is that then people like us has to put capital into that business. Okay, and we know that when people come in, they are taking loans. Okay, they'll take a car loan. They are not necessarily going to invest. I'm saying if everybody, all of us have to work together to make that investment into onboarding easier, then we can carry a lot more inventory of inactive customers, which one day I'm convinced will become.
So let me spin it forward then. You're saying that if only we were to open the gates a little more or make entry a little easier, right? No one is saying allow everyone in, though that also has been argued or being argued nowadays, at least philosophically, that open the whole thing and let's sort of work with odds rather than saying that everyone is a crook first and whatever. So if you're saying open, if you're able to allow more people in, then arguably the sense of inclusion into financial services can grow up substantially.
See, we have to see, as I said, it's a continuous curve. So one is that you must allow everybody to come in. After everybody comes in, it becomes a responsibility for people like us to make sure that just by opening an account means nothing.
Sure.
But then but then the responsibility clearly shifts on to me to make sure that you have opened an account. This is what you can do to meet your life goals. This is how you can use this as a tool to meet your life goal. Because only digitally, you will have a cost structure where you can actually run an SIP at 500 rupees profitably. I will tell you an astonishing fact. We are the second largest POP for NPS in India after India Post.
Can you explain POP and NPS for our audience?
I
know it's the pension scheme. But
it's a national pension scheme with Government of India, which hasn't, being such a brilliant product with such low cost structure, it hasn't picked up the way it should have got picked up. Okay, so distributors must then go and sell, but because distributors are not able to make money out of the remuneration that is there, it is not picking up. Okay, I'm saying in the private world, I'm saying because we are able to still make money, okay, or at least break even with a small cost structure, and it can only happen digitally. It cannot happen when you have people selling those products. So I'm saying digitally you have to go digitally, but you open floodgates, and then the responsibility shifts on to us to make it active and tell them what all you can do with such kind of products and why investments and why insurance and why all of it is important. And then, you know, we hope to see the revolution. Now, from a banking perspective, most of the people today, you know, start to open a bank account and or slash forced to open a bank account, because otherwise the salary, where will salary upload go? That is why they open a bank account.
Yeah.
In financial inclusion, you know, I think you have to give a bit of a carrot and a bit of a stick. And a bit of a carrot and a bit of a stick is really that, you know, if you are getting a subsidiary, if you are getting anything, you know, it will flow directly into a bank account. Because then what will happen is he gets habituated to a bank account.
Yeah.
Then he doesn't keep cash under his pillow, which basically means that the same 1,000 rupees which is getting under cash under pillow versus in the banking system, the velocity of the banking system then you can use that money for lending.
Right.
You know, cash under pillow you cannot lend.
Yeah.
So I am saying there is a big upside. And I think that, you know, we have not even, you know, scratched the surface. I think we are at 0.5%, 1% of the possibilities that one can have. But to start with, you have to just make it very easy and play the odds.
Right.
You know, there is learning from the credit card industry. You know, credit card industry 15-20 years back, there was no fraud insurance. Okay, and so there was pressure. That, you know, if there is no fraud, what will happen, what will happen, what will happen. So I would say that, you know, the Mastercards and the Visas and all of them, you know, they put together and say that, okay, you know, we will play the odds. Okay, and we will give you fraud insurance. Okay, and I will charge the client. Of course, in many cases, the banks themselves took it because they were making money otherwise. And then it started to sort of move up. So I'm saying those kind of structures have to come in a bit.
Right. So last question, Anup. What's the one key challenge that you have ahead of you for this year as someone who runs a stockbroking company?
No, we have to just make sure that the key priority is, you know, that stockbroking is only one part of the investment. Okay, so it's not the be all and end all. Okay, you have tax free, you have many other, you know, modes of investment that is there.
No, I didn't mean it as an investment, as a firm that's maybe
no, as a firm, as a firm, you know, have, you know, products and services for every class of client, to segment your client as per their needs well, and make sure that you have, you know, all products and services for those segment of the client, and most importantly, ability to communicate that for you, I understand your world, and for you, I understand your world. Okay, and I am not, you know, everything for everybody. Because then that belongingness and that emotional connect happens. We will be touching 30 lakh clients in ICICI Direct.
Okay.
You know, and it is a testimony to the client, frankly, because, you know, neither we.
And how many of them do actual stockbroking?
You know, almost, you know, in these days and times,
3 million?
83% are active.
Okay.
83% are active. Okay, they may not be trading every day, but 83%. So and it is a testimony to the clients. I am telling you, I claim no credit, we claim no credit, and neither the big, you know, consultants who came in at that point of time should claim any credit, because they completely underestimated the power. I am telling you today, it is a supply side issue. It's not a demand side issue. It's a supply side issue. I think, you know, clients are very evolved. They know, if they see a good product, they know what to take. Okay, and if the supply of that particular product comes, I think there is a frictionless growth. We see it in WhatsApp, we see it in Facebook, we see it in Google, we see it in Apple, we see it in so many places.
Right.
I think that is the way to go, and that is what keeps us very excited and very motivated and very happy.
That's a wonderful note to conclude. Thank you so much, Anup.
Thank you, Govind.
Thank you.